Hello everyone and welcome to Educare 247. This is the 27th lecture in the series on financial awareness, and today we'll be covering the National Financial Reporting Authority. This lecture is important for RBI Grade B as well as SEBI Grade A 2020 examination. Now before moving forward, Educare 247 brings you SEBI Grade A 2020 crash course, which features around 5000 plus MCQs with concise content and live doubt sessions. To avail the benefits of this course, you can log onto the website and apply coupon code SEBI to get 1500 rupees off on the course. Now, moving on to the news, let us understand more about the National Financial Reporting Authority. So, the National Financial Reporting Authority has recently constituted a technical advisory committee to aid and advise the executive body on issues relating to drafts of accounting standards. The committee comprises 7 members, including the chairman, Shri R. Narayan Swamy. So, understanding more about the National Financial Reporting Authority, it was constituted in 2018 by the Government of India under Section 132, Subsection 1 of the Companies Act of 2013. It is an audit regulator. The decision to constitute the NAFRA or the National Financial Reporting Authority was taken after the role of the auditors and the Institute of Chartered Accountants of India came under the scanner for alleged lapses in various corporate scams, including the one that was at the Punjab National Bank. Talking about the composition, it consists of a chairperson who shall be a person of eminent and having expertise in accountancy, auditing, finance, or law, and will be appointed by the central government, and such other members which will not exceed 15 in number. Speaking about its functions and duties, it will recommend accounting and auditing policies and standards to be adopted by companies for approval by the central government. It will monitor and enforce compliance with the accounting standards and auditing standards. It will oversee the quality of service of the professions associated with ensuring compliance with such standards and suggest measures for improvement in the quality of service. It will work to protect the public interest. It has been given the powers to undertake investigation related to the following class of companies and body corporates, which include companies whose securities are listed on any stock exchange in India or outside India, unlisted companies having paid up capital of not less than rupees 500 crore or having an annual turnover of not less than 1000 crores, having in aggregate outstanding loans, debentures and deposits of not less than 500 crores as on 31st March of immediately preceding financial year. Its mandate also includes insurance companies, banking companies, and companies engaged in the generation or supply of electricity. Wherever professional or other misconduct is proved, it has the power to make order for imposing penalty of not less than rupees 1 lakh, but which may extend up to 5 times of the fees received in case of individuals, and not less than 10 lakh rupees, but which may extend to 10 times of the fees received in case of firms. Its account is monitored by the Comptroller and Auditor General of India, and it is headquartered in New Delhi. Speaking about the Technical Advisory Committee, the Technical Advisory Committee advises the National Financial Reporting Authority on how it can fulfill its mandate to protect the interest of the public as well as the interest of the investors and the creditors. Speaking about a recent action taken by the National Financial Regulatory Authority includes barring of former Deloitte Huskins and Sells chief Udayan Sen from auditing for a term of 7 years and imposing a monetary penalty of Rs 25 lakh for finding auditing lapses at the Infrastructure Leasing and Financial Services Limited. The watchdog has found Sen guilty of professional misconduct and not maintaining independence and quality in auditing accounts of the financial company. The role of the two auditors, that is Deloitte and KPMG affiliate BSR & Co, had come under scanner after a debt crisis unfolded at the financial giant, that is the ILNFS, in September 2018. The crisis had left a hole of rupees 1 lakh crore in the financial markets. The investigative authorities were quick to question the auditors in an attempt to unearth the layers of alleged discrepancies. So NAFRA issued SAIN a show cause notice in January for professional misconduct under Section 132, subsection 4 of the Companies Act. Under this section, NAFRA has the power to impose a monetary penalty and bar a firm from both internal and external audit. However, the current order has come despite SAIN's written petition which has been pending in the Delhi High Court. However, in an 88-page order, NAFRA found SAIN guilty of professional misconduct as he failed to disclose material facts in financial statements known to him. The most damaging finding of NAFRA is with respect to the loss of independence of a statutory auditor. The watchdog also mentioned that in the year 2017 and 18, ILNFS had actually incurred a loss, but it reported it as a profit. The watchdog also observed that ILNFS was not complying with capital to risk weighted average ratio and net owned funds, leading to a misstatement of the financials. So, as per Section 132, NAFRA can monitor and enforce the compliance with accounting and auditing standards in the manner which may be prescribed and oversee the quality of services of the professions associated with ensuring compliances and suggest measures required for improvement in the quality of service. I hope you would have understood more about this authority with the help of this example. So that's it for this lecture, but prior to ending it, I'd like to tell you that Educare 247 brings you a comprehensive course for RBI Grade B 2020, which features subjects such as economic and social issues, finance and management, along with comprehensive coverage of current affairs. So you can log on to the website and avail the benefits of the course. Thank you and happy learning.